Hey Zalwora Nation, I'm going to show you how a few huge, almost unbelievable events this past week put the entire global market on fast forward. We're talking about one tech company reaching a $500 billion valuation, gold hitting an all-time record, and why a massive $15 billion problem in Washington could actually help your investments. This isn't just news, it's your cheat sheet to staying ahead. Let's dive in. 1. AI-driven market surge, the tech revolution. First up, the AI train is not slowing down. In fact, it just picked up a jet engine. Global chipmakers, the companies that make the brains for AI, gained over $200 billion in market value in just one single day. That's insane. And here's the mind blower. OpenAI, the company behind ChatGPT, is now valued at an estimated $500 billion. That's $500 billion. It's fueling a massive party in tech stocks. The takeaway? Investors are betting that the AI boom isn't a bubble. It's the foundation for the next decade of growth. Gold hits record highs, the safe haven. Now let's talk about old school money, gold. For the first time ever, the price of gold officially crossed $3,944 per ounce. It's up nearly 50% this year alone. Why? Geopolitical risks are high, the US dollar is weaker, and people are worried about inflation. When the world feels shaky, investors run to the ultimate safe haven, gold. What are the pros saying? Goldman Sachs analysts believe gold could hit $4,300. 3. US Government Shutdown, the Washington headache. Okay, shifting gears to Washington. For the first time in 7 years, Congress failed to pass a deal, meaning the US government is in a shutdown. The estimated cost to the economy? White House says $15 billion for every week this lasts. But here's the kicker for investors. A lot of economic data, like inflation numbers, might be paused. This could actually force investors to look closer at company earnings instead of big government reports. 4. Private credit concerns, the red flag. Now, a moment of caution. This is one of the red flags this week. The massive auto parts company First Brands just collapsed, filing for bankruptcy with a whopping $10 billion in debt. Why does this matter? It highlights a problem in what's called the private credit market, money lent outside of big public banks. The recent boom in this area might be riskier than people thought. 5. Key market driver, earnings season. Speaking of earnings, get ready. The US shutdown is making corporate earnings reports the main event for the next few weeks. Analysts predict S&P 500 companies will see a healthy 7.9% profit increase. But it's a tale of two markets. Tech and utilities are expected to lead the charge with up to 21% profit growth in tech thanks to AI. But energy and consumer companies? They're looking at declines due to weak oil prices and cautious consumer spending. The thing to watch? Are companies actually deploying AI, or are they just promising it? And how is the average consumer really doing? Bank results will tell us a lot. Actionable takeaways. Alright, here is your Zalwora action plan based on this week's chaos. 1. With all the global risk, consider looking at gold ETFs as a hedge. It's proving its worth as a safe haven, but remember, a big rally already happened. 2. Focus on tech and financial earnings. They will be the clearest signal of where the economy is really headed. 3. Just be cautious about the private credit space. Recent failures tell us it's time to assess the risk closely. That's the wrap up of the week the world hit the market fast forward button. If you found this useful, hit that like button and subscribe to Zalwora for your weekly market cheat sheet.